What's up, fellow stock traders? My name is Huddie, and today we have kind of a special video for you guys. We're going to do some live trading. And there's a couple of reasons we're going to do live trading and why it's special. Specifically because we've had a really hot market as of lately. In the past 3 weeks, there have been silently some decent runners. And as of this week, we've really gotten a nice breath of fresh air into the market. And I've had quite the pulse on the market for the past 3 weeks. I haven't really been betting big, but my consistency has been there, and I just really feel like I have like I said, a good pulse on the market is the exact words I would use. And so today we kind of have a stock spiking, and it's Fcel, and Fcel is another one of those. It's a stock that I've done really well on. Since it started this whole like ring of dilution that it's been kind of pulling off. And so what we're going to do today is we're going to go over a couple of the setups that I have planned for. We'll run the market open for a little bit, and we'll see if we can make some money. I think today will be pretty profitable for Huddie. So there are a couple stocks I'm watching today. Fcel is going to be one of them, and we're going to go over that as well. AVEO is something that's on my watch. That's not really watching. That's not something I really want to talk about because something happens, we'll talk about it during market open. But this is one of the daily charts that I find very interesting. And then, of course, talk of the town, FNMA. Sweet, sweet, sweet breakout over here. So we'll start with Fcel. The plan on Fcel today, and what kind of has been the plan for the past 3 weeks is, what's been happening is once these stocks have been putting in, their short-term tops for the day, when charts have this like really nasty bag holder dilutive chart, and they're bouncing and they're rebounding into areas of significant resistance, what I've been noticing in the past month is that once they put in that first intraday high, 10-15 minutes, it's been nonstop fade ever since. And Fcel should be no different, considering that it's actually one of the more toxically dilutive stocks in the market. They had some Series C and some Series D preferred shares to start unwinding back in February, and I think the conversion ratios got really toxic. They turned into variable conversion ratios back here in June. So these people were just absolutely diluting the crap out of this stock and really changed what it looks like in a technical perspective and a fundamental perspective. I mean, the stock had 7 million shares outstanding or something like that back in October or whatever it was. And now it's got 125 million shares, and we've done a reverse split since then. So kind of what I'm talking about, and I'll go over it real quick in the OTC filings, just to show you guys what I'm talking about, because I'm sure it's good practice to get used to these things. I'm going to go try and go quick so we can get over all the plays that could be today. Fcel, what I'm going to do is I'm going to go to otcmarkets.com like normal. I typed in Fcel down to this disclosure section, and then to that most recent 10Q is what I'm going to open up. And again, Fcel's been something that I've been following for quite some time. So I know the parameters, so I'm going to go through it real quick. First and foremost, September 6th, 2019, we have 125 million shares outstanding. So this is not a low float. So what's that tell me immediately? Like, I'm not scared of a spike going through $1. I just don't think that's going to happen. There's a lot of freshly minted shares in this $1.70 region. There's a big share count right now on this stock, and it'd be hard for earnings to be the catalyst that gets this through $1. So I'm confident, taking any amount of shares, and the general plan on Fcel is risk $1. Let a high day get put in, and then let it fade. If I have 20,000 shares at 60 cents and I'm risking $1, I'm risking $8,000. And yeah, that's a big loss, but that's also, not the end of the world for me. And it's also kind of a decent starter. And then, maybe a 20,000 share at 63 cents, and then it kind of puts in a top a little bit higher and then starts coming down, and, we can reevaluate. So in the beginning of the day, my risk is $1. And I'll start throwing in shares once we kind of start seeing that higher days start getting put in. I think this resistance is really going to matter, and this is kind of the tangent that I was on before I got sidetracked with the daily plan that I have for this thing. So basically what's going on with Fcel is they had these Series C and Series D, and they're actually done now. So you see these redeemable Series C preferred stock and redeemable Series D preferred stock. So it says it's got $25 left, but before that, before July 31st, October 31st, it had 30,000 left, and so that's what they've been liquefying. They've been converting these shares into common stock, as well as they have these Series C preferred stock, about 8,000 as of October 31st, and those are all gone as well. So what did they do? So October 31st, they had 7 million shares that issued and outstanding, and then as of July 31st, they had 118 million shares issued outstanding. So, these conversions were for a lot of shares outstanding, and since they're newly minted shares, they get dumped onto the retail traders, and all the retail traders become bag holders. And you seriously change the chemical makeup of the stock. I mean, it's got different shares outstanding. It's got a bunch of supply in a certain area. Fundamentally speaking, the company is no longer it can't really be attractive. This is not a good situation for retail buyers to be buying the stock. So, just real quick, we'll go into into a bit of the stipulations. And again, like I always do, I just type in Series C convertible, Series C, because that's what I want to look up about. And the section, eventually I'll get to a section where it's going to show me a bunch of Series C. And so this is, probably one of the first sentences that I pick up on, and it's really important to me. As of July 31st, there were 0 shares issued and outstanding. So the Series C are done. There used to be 33,000, now there's 0. So since October 31st, they completely converted all those shares into common stock and diluted onto the company. Then here's all the stipulations about the Series C and how it kind of started off as a fixed price for the waivers, and then as time went on, it turned into a variable price conversion price. You can see that the initial conversion price was $22, and then as you keep reading it, it kind of changes from 22 to $1.27. So this just gets really, really, really ugly. And you keep going down, and it tells you, you converted 1,600 and 8,900 Series C into 1.6 and 4 million shares. This is dilution. This is kind of what I look for. So that's a Series D. We know it's done because I read it earlier. Now we're going to go to the Series D because those were also pretty heavy. And again, this is something that I've already read, and so I'm going to skim through it real quick. But at one point I read through all of this, and I got a good idea of what the Series D was. And actually, I read through all of this way back here in February. So when I had this whole run and I was in Europe, I was upset that I had to miss it because I knew I wanted to do something with it. I just didn't really know how to do it. But I knew all this stuff existed. And so, it's kind of a constant learning. We're always learning. We're always jumping through the hoops and figuring it out. During the 3 and 9 months ended July 31st, holders of Series D converted 18 and 30,000 Series D preferred shares into 59 million and 61 million shares of common stock. So, and in the 3 and 9 months, they just absolutely diluted the crap out of their company. And now to this point, they have like 25 shares left over, 25, they have barely anything left of the Series D. But all those conversions kind of happened in this area of all this volume. I mean, where else would it have happened? Maybe a little bit up here, but this is most of it. It actually says, if you keep reading, that the company effected conversions that reduced conversion prices ranging from 14 cents to 61 cents. So, these things start off with like this initial conversion price. And if you read through this, you'll find the initial conversion price. But then by the end of it, they're converting down at 14 cents. And that's what, a toxic spiral dilutive situation looks like. Where the lower the price goes of the stock, the lower the conversion prices go, and the more shares outstanding that the stock's going to eventually have. And then fundamentally speaking, the company is trash. They've diluted everyone. There's no value to the shareholders. So that's the situation on Fcel. And so with all that known, for this stock to break out of $1, in my mind, is damn near impossible. And what I think is much more likely is we get some kind of morning spike, and an intraday high gets set, and then we fade off for the rest of the day, per as usual on day 2. So I do have a small starter on this stock. I guess we'll go over it because it went red on the day, and there's always a question of when and where to take pre-market shorts. And just a golden rule of thumb is you generally don't want to. This is a situation I did. But I have a really good grasp on how I'm going to play this, and I know how to manage this pre-market short. And so we're just going to allow. So there's 17,000 shares at 64 cents. Again, the whole plan is to let this kind of make that intraday high and start attacking once we start seeing that lower high, the cracking, the failure of green red, things like that. I'm gonna be patient. I got 17,000 shares. I have a good entry. I have a good size. And again, 17,000 shares. If it starts spiking on me, I'm not gonna cut right at green red. I'm gonna give it a chance to put in the intraday high. There's also an active ATM within the stock, and there's a lot of bag holders. So the selling pressure should overwhelm the buying pressure today at some point. And the resistance that's really gonna matter is up here. So if I have 20,000 shares at 60 cents, yeah, I risk $8,000, but what are the odds it even gets there in the first place? And the much more probable odds is that it gives me a different risk to risk off of within the first 10, 15 minutes of market open, and then we can go from there. So I know this is a starter that I can very easily manage, and it's got the volume and the liquidity for me to get in and out, so I don't really mind the starter pre-market. I just don't want to get in over my head before the intraday high is made. Considering it's still a pre-market, there's no way there's an intraday high that's been made. So what we're going to do is we're going to just pretty much take off pre-market. I have a line drawn at 67 cents because that's the after hours high, and I think what's probably more important, it's probably up in that area. But again, I'm just gonna kind of feel it out because that's really not the best spike, and any of the daily resistance levels I'm trying to use to risk off of, they're too far away. So 76 cents isn't bad. The pre-market highs might be a resistance level that might protect and I might use to risk off of. It might be green red. Again, we're just going to let market open to kind of decide. Again, I want the top to get put in. And that's what I've had a lot of luck lately of spotting. And so I'm trusting myself to spot the top once it's coming in. And I think the name of the game right there is patience. As long as the stock is red, I don't mind shorting it, so I can be patient here. CRK is one I am watching. It's actually having a nice little gap up right now. So here's the next play I'm going over today. CRK, it's got that multiple green day pattern going on right now, where the first time it goes red, it's kind of like in a significant trend change for the stock. Yesterday's closing price was $9.13. So yeah, it's a little bit of a gap up right now. So CRK, it's kind of redemption for me. I remember I saw TELL the other week, and it had kind of the similar pattern where it put in a bunch of green days and gapped down and had that really hard slam red. And I imagine that CRK is going to do something very similar. What I really liked about TEL was that it gapped down that day, and right now CRK is not gapping down. It's on the watch list. Again, that first time it goes red, that should be very important for CRK. Just going to check how much the shares are. Might have to reserve some kind of at the open. We'll see. I'm watching it. I'm watching for that green-red move. I'm watching for that first sign of trend change, and I'll look to get in. That is CRK. Last but not least, I'm looking at FNMA. Let me just make sure that's true. Yeah, so I guess I have a slight watch on some other things like DCGD. I'm definitely watching, but it just kind of looks like it's not going straight vertical yet. It looks like it kind of has room for one more day of spikeage, just by the look of it. So I don't really want to touch it yet, especially because it's kind of illiquid. There's no reason to get into a hairy situation that I'm uncomfortable with. It's a whole other conversation if this pours in a lot of volume today and goes into the 250 area or higher or whatever. The more volume, the more liquidity, the safer I'll feel about attacking it further down the line. If I miss it today, oh well. It does have that nice 3 green days, but they're not in a row, and there's nothing really, for sure fire about this, and it just kind of broke out from that 140 level. So it's on the back burner, but I doubt I touch it today. I don't even want to watch it. But I am kind of watching as we get 4 minutes till market open is Fannie Mae. Awesome breakout yesterday. Should continue today by all means. Up from. Here's the thing, we're up from 250 into the 4 area. So it's like, we've actually have this really nice percent gain on FNMA. And although it's not the ideal shorting pattern yet, it kind of looks like this got really chased really heavily into close. So on the slight chance that we kind of spike up towards $4 and level 2 turns really hard, I might take that short on the double top of $4 and see if we can fade red. And if we do fade red, it's probably going to have one of these violent pulls to the 360, 350, 340 level. And after that, I won't really want to watch it. But if I do notice the turn happening in real time, it's easy to borrow, it's easy to short, and I'll get a fill on ARCA, and maybe I can make a quick 10% out of that just to cap off the day. It's going to be one of those things where you got to have really tight risk, because once it blows through high of day, you're going to be a fish out of water. So we're getting close to market open. CRK is barely gapping up. Fcel's threatening a red-green move. And again, the higher it goes, the better. I want the intraday high on Fcel to get put in at higher prices. So that way, when it eventually fades and comes down for the rest of the day, there's more room for it to come down. This thing is going to trade a ton of volume today. It's already got 3 million shares traded pre-market, a lot of which is in the 60-cent region. Let's throw up VWAP. Sometimes it's a nice guide on these gapping crap days. Oh, I guess it's already up. So we know that that's up there at 76 cents. We don't necessarily really need this. What I'm going to do is I'm going to remove pre-market on Fcel, because again, I want to see the intraday high. And that's going to take a couple minutes to form, and I don't really need to watch. So FNMA is getting a nice little gap up right now, 391 by 391. Print's going through at 394. And the high is 396. So we'll see if it turns out the gate. We'll see if who overwhelms who. Fcel is now green on the day. Which is fine, and my start is just fine. The whole point is that this isn't going to break out of 1, and that an intraday high is going to be set before it breaks 1. And then once the intraday high is set, it should fade off for the rest of the day. And that's what we're going to go for. All right, I did short a little CRK on that plunge right there. Not really watching Fannie Mae right now. Fcel pushing a bit. Definitely did get rejected off of high of day right there for Fannie, so I don't mind taking a small short as per the plan. That was the double top. And then let's see if you can get ugly enough to go under green red, which is maybe that 86-cent low. Nice panic on CRK. I didn't take the amount of positions that I should have. I only took 1,000 shares. I just kind of stopped watching it. And that was a mistake. Okay, right then and there, we got a nice little hard crack on Fcel. So that high of day is put in place. Now we have a nice little top at 65 cents. Gonna give it some time still. I mean, a lot can happen. FNMA not breaking down. So I'm gonna get out of some of my shares there before it starts ripping on me. Really, a lot of Fannie Mae I shouldn't be in. I don't have a focus on it, and I should be focusing here on Fcel. We've now you know, throwing a lot of volume into 65 cents, cracked into the 60 cents. Now we're red on the day. Fannie Mae, meanwhile, has broken my double top and it's going a little higher, still under that $4 resistance level, and running into some trouble here. But you know, the odds are this does continue today. So, you know, as long as it's green on the day, I want out. Small loss there, and I'm missing a play now. Missing a play. I mean, I have that small starter of 17,000 shares, but there was a moment to add into this that I wasn't necessarily watching too closely. I was watching Fannie Mae, and I'm still not out. And this could start squeezing on me now. I'm out of Fannie Mae. A little bit before the $4 resistance, roughly a 10-cent loss. CRK, we got some covers while that was happening. That makes up for the Fannie Mae loss for sure. It's just unfortunate. You know, that's where the focus should have been, right there and in here. And just trying to do a little bit too much today. That was kind of what that situation was, but really got out unscathed and fine. Fannie Mae continues higher. I'll show the trades for absolute transparency. So you can see I just kind of shorted it and then covered that up real quick. Fcel. So we have that, you know, like I said, this is going to be a really red, ugly candle today, and that's kind of what's in the process of being made right now. The intraday high has been set, and you know, I'm not 100% sure it's the intraday high, but it's nice that it's red on the day. That we pushed green, that we failed. That's a good sign, and then I guess now you could think about a 65-cent high of day risk. But I'm gonna let this trade a little more. You know, we still are relatively 5 minutes into market open. And I definitely think that this could still push. Fannie Mae failing 4 right now. Failing 4 right now. That's kind of interesting to me. As we kind of just broke above. And then failed. And again, it's not a play I should really be all too concerned with. Our high day is 402, so that's going to be my risk. 5,000 shares at $4, and I'm risking 2 cents. And idea is that this pull could get a lot uglier than a lot of the longs overnight might think. And so we'll see. High of day risk will suck if it comes down to that. And 390 support. So we'll see if it can catch. Just kind of watching the level 2. Watching to see if it starts to turn really heavily, if a lot of volume. Just kind of rejected that 61 cent level. 396 is taking a lot of hits on Fannie Mae and holding. And now reversing a little bit. Definitely reversing a little bit. Got quite the battle going on right now. And if this is a higher low, I don't mind just like stopping out. And again, the distractions aren't great. This is where my focus should be. Should be getting size here. I should be looking at bounces over here. You know, it is what it is. This was also a plan that I did plan for, so like, and I'm not totally upset that I'm in it. And if it works, it's gonna make me happy, I guess. But it's just kind of a little frustrating. The amount of shares that I want to play with this stock and the amount that I have in. So now we have a 390 test on Fannie Mae, which was kind of in a hurry. And a nice little bounce here on CRK. I think that resistance I want to use closer up towards the 9, so I don't necessarily want to attack this one just yet. We are testing red-green, and that is where I think, we open up the door to panic. So I like that I have 5,000 shares from 4, and we're testing green-red. And I could add here, I could in theory, but there's also a chance that this catches. Because we did have that gap up. We do have that really strong breakout chart. And if this does catch, I don't want to be in from 480. So, or 380. So I'm going to let this kind of fail and see how much we panic. And then once the level 2 starts to turn, I'll just cover that up. So far, we are panicking. The level 2, the bids are thin, the asks are stacked. We're red on the day. Nice bounce here. Really nice bounce. Again, I kind of want it more in the 9 area. Fannie Mae really working out here. Getting some 370 prints. 378s. And if it starts to kind of like stack up, I'll start covering. So far, not stacking up at all. $375 prints. Still pressuring the bid pretty heavily. Showing size. 373. I don't mind some covers. The level 2 isn't stacking by any means. I kind of did right there, actually. It is stacking right here. It's trying to catch support. So I'm throwing in a couple covers here and there. And I lost it. Again, there's support down here in 350, 360. That's where the breakout started. And so this is kind of best case scenario already. I'm really happy with these gains. The quicker I can get out of this is the quicker I can go focus on something else. So again, the level 2 isn't stacking. I'm just kind of covering. So I can go focus on Fcel. So I can go focus on CRK maybe. There's still more plays to be had today, I'm convinced. So I'm out half my position on FNMA. Right there we stacked for a sec. So this is probably going to bounce here. So I'm going to get out all of my shares. I'm all covered. That's roughly a $2,000 trade. We do have a nice bounce here on CRK, and I could short this right now. I'm out of Fannie Mae. It's heading lower. That's not surprising. And I am kind of watching this for a dip buy as well. Remember, that was a 10% drop that we talked about this morning, and this could be a 10% drop right now. And it could start to bounce here. I think support's way closer to that $3 level, but 360 is stacked right now. And they're putting up a fight, and they're putting up a fight, and they're gone. I am watching Fannie Mae for a dip buy. OTC panic dip buy. It's a classic. I obviously covered some shares too soon. Should just let the level 2 do its thing on the turning. I didn't do it though. Not this time. God, just such a beautiful panic that when this does turn, I do want to buy it. It looks like it's happening right now. So I just bought a little Fannie Mae. 3.57. You see that green arrow right there? That's me buying Fannie Mae. You get the volume coming in right now. That was it. That's the buy. And now it's gonna pop. It's gonna pop a little bit. You know, what's the range it's really got today? I don't know. It's not great range. So I will be selling this relatively quickly. Just a quick pop. Just very predictable. You know, I have no reason not to pick up $100 off the floor, you know? So any red arrows are just me selling. I picked up 3,500 shares. It could have been more. You can see just that entry right there is just perfect. And that's just from watching level 2 mainly. And knowing that the breakout happened at 350 yesterday. I mean, that's where this whole thing started from. Right? Like the support, yeah, it's at $3. But this breakout kind of started here at 350, so it's not surprising that this is where it's bouncing. And the level 2 turn helped. Into the 370s, I'm a seller. Done with that. So that was the ideal short on CRK. I was just too busy getting out of Fannie Mae to get into CRK and really evaluate what's going on there. And I already do have some part of that position still open. So it's not terrible that, again, I do think this bounce is going to be short-lived on Fannie Mae, so I'm trying to get out. Into strength. I have no idea how much I've made at the moment. I could give a rough estimate, but I don't like to look at my dollar gains. I don't like to let it affect my next trade. If I'm just going to take a rant real quick, then I will. I hate looking at daily profit losses. It looks like it's kind of turning here, so I'm going to sell the rest of my shares. And that was like a little 10-cent pop, 3,500 shares, which is $350, right? And you know, that's good money. It's not bad. So I hide my profit loss. I hide my total account value. It's something that I have the privilege of doing so because I know that I am consistently profitable. And there, I'm out of Fannie Mae. Just bada boom. Take the panic, buy the dip, sell the rip. Easy. And Fcel, working. CRK, working. So now it's kind of a time where I just, you know, I'm patient. I'm kind of allowing a lot of the other things to happen. So the plays that I had planned for have all come and gone. Fcel is probably something I still want to short a bounce into. I'm up $2,000 right now, roughly, and I still want to short a bounce because now I do think that high of day is set. You know, we've kind of cracked really hard off that 65-cent level. We're down 20% and heading lower and trading massive amounts of volume. So I do want to short a bounce if we get one. If we don't, I'll let it go lower. I don't know. That's kind of how I'll play that one. CRK, I do want in more, but I also don't love this price action. And I don't love the risk reward. I mean, I'm kind of far off from 9 still, which is where I think that area should reject. Whether it does or does not isn't the kind of conviction level that I have with Fcel. So I kind of want that risk reward to be more tighter. This is kind of getting really ugly on Fcel, so it's going to be hard not to cover up right now. I kind of have this like 40-cent price target in my head, just kind of like that's where it kind of started from, and Fcel's kind of known to give up all of its gains. So I had this 40-cent price target in my head, kind of down where support is. And like, yeah, I could be conservative and cover into this, you know, this is a nice pen. This is 20%. This is $2,000. And I could be conservative and be covering some into here. Maybe just to make a point. All right, so I put in 2,000 shares, and they just got covered. 53 cents. Because it's going to bounce, you know, and eventually, like I said, I think it's going down to 40 cents. Nice bounce here on Fannie Mae. Sold those a little too soon. And had I taken a lot of size here, which I could have, I definitely had the liquidity, and it definitely was very obvious. This is a really nice, predictable move that's, it's risk-free to some extent. Fannie Mae heading lower. I kind of forgot which tangent I was on for Fannie Mae, but so I have 15,000 shares left, and I can cover here, or I can bounce and add to my position and then still look for that 40-cent cover later in the day. And just with my awareness of how Fcel trades, I think I do want that 40-cent price target, and I want pretty much all my position to be covered down there. Nice that I locked in some. I mean, it should bounce at 50 cents. This is the support from the previous day. It's just how strong is that bounce going to be, and what do I expect from it? And what I definitely don't expect is I don't expect it to go up into the ones. I barely expect it to break 65 cents at this point. Unfortunately, I was a little busy with Fannie Mae to slam into that 65-cent stuff. That was obviously the move. And I have a lot of shares located for it. I'm ready for the play. I got distracted with Fannie Mae. And then again, look at this bounce. This is beautiful. CRK I'm ignoring, and it's kind of putting in that lower high now. And by ignoring, that's a very vague statement because I do have a short on it already. I took 1,000 shares at 910, and then I covered up, I think, 300 of that down here at 820. And I can short more. I just, this kind of happened right at market open, and I was kind of taking a loss of Fannie Mae, and then I was also kind of worried about Fcel. So again, it was a little bit of trying to do the most, and I got a little. I just ended up with small size. I ended up with a small loss, and then killed it, and then I kind of missed this one completely. So I'll let it keep recording for now, but I think that's going to be the market open for us. Fannie Mae or Fcel just absolutely tanking down to 50 cents. So I'm going to throw in another order. Just because that's absolutely beautiful. Panic. Fannie Mae just turned up there at 380. And kind of from here on out, I don't care what happens. Fannie Mae, if this was more extended, sorry, let's get all this out. If Fannie Mae was more extended, then I'd be really interested. If it had more range, if it was extended, I'd be really interested in going after that bounce short right there. Kind of like a first red day short. And it is a first red day short, and this could very well work. I just like when there's more range, when there's more consecutive green days, when it's truly a trend break, and this is kind of just going to be a consolidation day in my mind. Again, this guy I kind of want to bounce, and I just don't think it's ever going to bounce to a level where I'll feel comfortable adding, even though I don't think 65 cents is going to violate. I'd hate to take a loss on Fcel. So I kind of like where that position's at and what the risk reward entails. And unless we get a nice bounce back up to the 62, 63 cent range, I probably won't be adding too aggressively. And same for CRK, unless we get a bit of a better bounce into the nines, I don't really want to add too aggressively there. But so far, a good morning. Got a lot on video. That's always great. That's always good to go back and rewatch these things. Yeah, so, yeah. So end of, 20 minutes in the market open, made 16, 18, roughly $2,000. Quite the unrealized gains over here on the CRK and the Fcel position. And this is where we'll go. I mean, this is a good start for the day. I'm totally out of Fannie Mae. Some good money was made there on the short. Some money was made on the long. Fcel I've locked in 500. That pretty much covers my commissions. Still up 1,600, and CRK looks like it's gonna, I don't know, do something. I'll keep it rolling for a little bit more because I might take a short of CRK right now. We are kind of stalling out this 885 level. But I think we can push through it. You know, I really do. I think we could push through and maybe even get into the nines. So we'll see. But honestly, I think the gist of the trade, I mean, you really saw what I was going for. Fannie Mae, you really saw what I was going for with the double top and the panic green red. And Fcel, you really saw what I was going for with the set the intraday high. And then this candle is going to be a really red ugly candle. And this shit is pretty predictable, guys. I hope everyone learns this from this video. And that's it for me, guys. Have a good one.